Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I got Clint Sorensen, Chief Investment Officer at WellShield, an outsourced CIO and investment research company. Nick Fusco, CEO of PM Insights, a pre-IPO stock secondary market pricing company. And Evan Cohen, founder, Chief Investment Officer of WithVincent.com. It's a media company focused on alternative investments. Okay, fellas. So first one I wanted to hit on with you guys today. So Waymo. So Waymo just did a round. Right? It was a $5.6 billion raise. Google, Alphabet led the round, but Andreessen Horowitz came in, Fidelity, Perry Creek, Silver Lake, Tiger Global, T. Rowe Price, right? So Waymo, for those that don't know, is it autonomous driving technology? As far as I understand, in kind of like the pre-IPO stock space, like for emerging technology, like autonomous drivers, this is like the only one that's kind of living in this pre-IPO stock space, but it's majority owned by Google. But you got these third-party people coming in. So I wanted to talk to you guys. Like, what do you guys think about Waymo? Have you driven in a Waymo before, right? What do you think about the structure? And then maybe like, I don't even think the thing trades in the secondary, but it'd be interesting to talk about that too. But Clint, like you're probably the best, you're the most well-traveled gentleman on the pod. What do you think about, have you ever ridden in one of these things, a Waymo, before? Like, what do you think of that whole experience? Yeah. What do you think of all that?
I've never ridden in it, so I can't speak on the experience firsthand. But I'm open to, right? I think all of those, I think autonomous driving / riding, autonomous taxis are in our future. I mean, we're seeing a lot about what Elon Musk said about Tesla and saying that they're really leading the pack on the autonomous driving or autonomous taxis. It'd be interesting to see if that's really true, but I haven't done it from a firsthand experience, but I think it's the way of the future.
Yeah, I got you. Yeah. What about you, Nick? Like Evan, you guys ever read in one of these, or maybe a Tesla, like that full self-driving? You ever done anything like this?
I don't know. Yeah, I have. Yeah, I got to do it last summer, I think it was. And it felt like it wasn't part of the future. It was the here and now.
Really? Was it Waymo or was it Waymo?
I think it was Waymo. I was in San Francisco. It was a Jaguar E-Class or the electric one. And I hopped in it with one of the brokers that we work with. And he didn't bat an eyelash. He just said, "Oh, this is my normal commute." And he brought us somewhere, and that was that. And he thought nothing of it. And I'm in the car. We've got another colleague, and she and I are looking. This is amazing. Like, what is going on? And he's just chit chatting about whatever we were talking about in the lunch prior. And like, this is wild. But
that's amazing.
It felt just very comfortable, smooth drive, probably more smooth than your normal Uber driver anywhere. So we were pretty relaxed.
Oh man, it's amazing. So
yeah, Evan, have you tried it?
Yeah, go ahead.
Yeah. So when I lived in San Francisco in 2016, I rode in a Cruise automated automotive vehicle, the one that was acquired, I think, by Chrysler.
Yeah.
And so they were doing their like training around San Francisco. They were the only ones with the license at the time. And I did get to go in one of the cars, although there was an employee of the car in the passenger seat sort of monitoring it. I did get to experience it. That was like almost a decade ago. I haven't had a chance to ride in an autonomous Tesla and or one of these Waymo vehicles, but I would love to whenever I go back next.
Yeah, I mean, they were in San Francisco, LA, Phoenix, and now they're adding Austin and Atlanta. Like they're starting to scale. I actually just listened to a podcast with one of their they have co-CEOs. They're like, yeah, we're like starting to expand this out now to like multiple different cities. Like I don't know when it's going to hit New York. I mean, they're not. I mean, like Clinton, you don't have anything like this down in like Charlotte or Raleigh, nothing like this in North Carolina. Yeah, like they're not in New York.
Yet.
They're not in New York City yet.
What does this do to Uber? What does this do to Uber and Lyft? That's my question.
Enhances.
Okay, so
probably makes it better, right?
Right. Yeah, so I was hearing an interview with Uber's CEO, and he was like trying to cut deals with these guys.
Right? That's what I'm saying. I think it's huge for their business. Not good for the gig economy, but huge for their business.
I mean, it's so interesting.
I feel like this was the pitch for all the ride-hailing apps back in the 2010s and 2020s, like that whole 10-year range. Everyone was saying, look, this business model is never going to work. The gig economy, like you're losing money here and there. And I feel like the narrative was always like, at the end of the day, we're going to solve the supply side with autonomous vehicles, right? We'll get that down to cost by automating and having self-driving cars, which again, I was living in San Francisco in 2016. They were on the roads. I was seeing them. I rode in one. So I think it was I think that was like the narrative. I think a lot of people were saying, or at least a lot of investors were saying, wow, that'll never scale. It'll never hit the mass market, regulatory hurdles, red tape, et cetera. I think, look, time is the only way to see how this thing unfolds, but it looks like it is scaling out. It is growing. I think that they're achieving the milestones that they said they were going to achieve. And for Uber and for Lyft, it's an absolute boon, right? Because it just makes their businesses substantially more margin friendly. They can make way more money, and they have all the demand. They won, so that's a huge business for them. And I'm a long, like disclosure, long Uber holder, long Google holder, believer in all of that things. In fact, it was the thesis for why I bought NVIDIA in 2016 was because all of the AI self-driving chip. Nothing really to AI, only self-driving. I was like, this is the future. Going to buy. This is where I'm putting my chips.
Yeah, I mean, Nick, so this interview that I listened to, I'll send it to you guys if you care to listen to it. But like the CEO Waymo was like, the stats on how safe the Waymo driver is compared to like a human, like they called it, I can't remember the terminology. I think he called baseline human. That was like the, effectively like the average human. I mean, like multiples safer.
Right.
So, I mean, do you think that there's a time where there'll be like legislation passed where you have to have either, if there's a human sitting in the seat, that's fine, but like the car is going to pretty much drive it, and then the human maybe can kind of intervene, or you can just do full self-driving? Like, is that coming, you think, from a regulatory perspective in the next like decade?
Well, if you really think about a lot of what we've discussed about AI more recently, it's okay, how would XYZ large language model work on the SAT? Well, they're going to ace it. How are they going to work on this? How are they going to work on that? So if you just apply it to going to the DMV and passing that test and doing a drive, guess what? It'll do fine. 99 times out of 100, well better than the average 17-and-a-half-year-old, whatever it is in your state, right? So absolutely, it'll come, and I think in a lot of ways we're just there. There's
my
not
kids
much
will never drive a car.
about stepping into the car.
Yeah, I don't think our kids will ever drive a car.
Thank goodness.
So no one here is
so
a bear.
happy you say that.
Yeah.
Wait, just to be clear, so nobody here is a bear on the regulatory red tape.
I think
I'm always there's actually a bear on regulatory red tape.
Yeah, that's right. But I think there's going to be this there's going to be this flipping effect, right? That's what I would say. So like there's going to be a lot of people saying no until it's like seatbelts. Like you got to have a seatbelt in the car. And I think this is going to go the way of the seatbelt. Like people will be like, this is so much safer, right? Having the computer drive the car than having people drive the car. Like deaths will be down, injuries will be down, human injuries will be down. Like this, we have to do this for like society. You know what I mean?
It's a tough call for the lobbyists to go against, I would say.
I think so.
Yeah.
I think so.
I just feel like in my bear case is like you need someone to sue, right? Like that, at the end of the day, it's not about the safety; it's about the liability. And all you need is one robot to kill one human, and
this might be why
chain effect there.
This might be why Waymo is its own cap table. No, listen,
have your autonomous driving czar.
Yeah, this might be why Waymo is its own cap table for liability purposes. Well, right? Yeah, that would make sense to me.
I think for it to go mass market, and look, we all live in New York, or most of us live in New York City. Like, I just wonder, in a city where there's so many pedestrians and bikers, I'm not saying, I certainly believe that it is safer. I mean, the statistics show it at 20 billion miles driven. I believe at the end of the day, when someone is injured or killed, who will be sued? And it'll just be a chain reaction of how do you determine what the liability is? And that's just really hard. And for me, I have not seen that yet.
No, that will certainly play. I mean, I think this is like the tide's coming in on this. Like this is happening, right? But to your point, Evan, there's going to be some bumps in the road, certainly, right? And it would be horrible, obviously.
Waymo or Uber or Lyft or whomever, now it starts to be, okay, in a lot of ways, it's probably, sadly, a rounding error for how much revenue they're taking in. You kind of hit on the shrinking of the difference between gross margin and net margin before, right? That's going to shrink out. Okay, now you're going to have some liabilities, extra liabilities. But yeah, I almost think a lot more of that quasi spin out type setup is also to promote that this is a cutting edge technology. They can move a hell of a lot faster not being completely under Alphabet as opposed to being mostly owned by Alphabet. So I think they're going to be able to advance their market position a little bit better, and then also collaborate with the Ubers, the Lyfts of the world a little bit easier too. Not being a full on, hey, you have to do a deal with Alphabet. No, you're actually doing a deal with Waymo that happens to be owned by Andreessen and T Rowe or Fidelity or some of the other names we mentioned. And I would say, just to hit on your point earlier, Aaron, I don't see much, if any, activity in the secondary market, but we do get to see those funds, the 40 Act funds that have invested. We saw a big convergence in how they valued the stock recently. So that's quite interesting. So they all started to come together and in line. And then, it kind of makes sense. Guess what? There's a round not terribly far away.
That makes sense.
There is some market visibility.
I'm a big believer in autonomous driving as an emerging technology, and I'm like dying to find ways to invest into it. Right. I would say more directly as opposed to just kind of through AI in general. So
buy Google, buy NVIDIA, buy Uber.
Yeah, not
investment advice.
And maybe buy Tesla, right?
Yeah, I mean Tesla's probably the easiest, like I'll call it closest to pure play that you could get, right? For just the technology, I suppose. But okay, hey guys, let's hit on Cerebras real quick, and then really I want to talk about Starlink, if we can. So all right, so Cerebras Systems is a platform. All right, I'll call it a platform. We were talking about this a little bit before we started, but they make chips specific for AI, but they have software and really a full robust solution to help with AI. But they've had an incredible run here in the secondary market. So maybe Nick, I'll throw it over to you if you could walk us through just what you're seeing kind of in this space, in the secondary space for Cerebras Systems.
Absolutely. So I think Cerebras wants to challenge the dominance of NVIDIA. We put an article about that out here around when they did, I think there was their F1 round, and they're doing a hell of a good job. I mean, if you go to their website, you look at how they're marketing themselves, it is on the compute, on the performance. They are not twice as fast, but they want to claim they're 8 times as fast in certain instances, or well beyond that in several others. So we've actually seen their secondary market skyrocket relative to even that most recent round. So the most recent round, the F1, within weeks of that, we've seen the secondary have large transactions that are double. So there's this appetite to have exposure. And even if you relate it back to the autonomous driving, when Evan's like, okay, well, invest in Uber, invest in Lyft, invest in Google, and maybe some Tesla. This is a case where you've had so much exposure grow from your interest in NVIDIA. Why wouldn't you complement it here? I mean, this could be a really good challenger. And a lot of the use cases that we're finding is they are getting these massive institutional customers. And I'll just list some of them out here. But it's like you have your GSKs, your AstraZenecas, Mayo Clinic, and so many practical use cases going to come from the health sector that this sort of compute is just going to really bring people up to speed and do things in hours that might take weeks normally, right? So definitely industrial grade technology here.
So Clint, I got Cerebras pulled up on PM Insights here, right on screen. So the last round was that's right. The last round was at $3 billion. The implied based on the secondary trading is at $6.9 billion. Right. So these guys, that's quite a run. And really this, Nick, when was the F1? That was June.
June, right?
Right. So this is maybe called 4 months, right? 4 months time. They've almost doubled. Like how do you think that's going to impact the IPO price, right? Because these guys have filed the S1, like they're looking to go public.
I mean, I think the trend's strong. So I think obviously you've got to be long something like this. And I think as we start to move from kind of AI 1.0, large language models, NLP, over to inference, and you've got a company that's doing both hardware and software, And like Nick just said, industrial quality. Because like, think about who's going to really benefit from AI as it scales. It is, in my opinion, I think healthcare is one of the biggest benefactors. I think customized healthcare at the individual level, and it requires this type of compute. It requires this type of platform. And everything I've read is they're a clear leader in the space. I think they're a definite competitor to NVIDIA. I think they're a competitor to Grok. I think they've got a strong position. I don't think, other than NVIDIA, right, the true leaders haven't really been identified here. And so I think you're going to continue to see strong trends and investments in this space. And I think this is a necessary picks and shovel play, not necessarily this one. It's not investment advice in this one in particular, but look, it's a strong trend. I think, price goes higher would be my bet as we continue to move from what I call AI 1.0 to AI 2.0.
And just want to compliment one thing that Clint hit on and see if he changes his mind. This is not investment advice, but the revenue growth has gone 10x since 2021. So this is not just a share price movement, right? This is a profound jump from like a 25 million revenue to 3 years ago. So.
And you can continue to see it move up, right? I think that continues to scale. I don't know if that growth rate drops off anytime soon because we're just not there yet in terms of the ecosystem. So I think I see strong performance here.
Yeah. Okay. So Evan, like the this thing's up, call it 2x plus, right, from its last primary round. To Clint's point, the trend is strong. What would you think about taking a position? They filed the S1. Would you buy in the secondary now, or just wait until the IPO happens and then pick it up there? Like, do you think there's still legs to pull the trigger and buy something in the secondary ahead of the IPO?
Not investment advice to start off with. Frankly, to me, it's a long hold. I believe that this is an absolute opportunity. If you're thinking 5 to 10 years out, it feels like a very nice picks and shovels infrastructure play. I don't know if you three remember, I think it was maybe earlier this year or late last year, Sam Altman talked about how like the future currency of AI was going to be compute. Like, hey, like the way our society decides to throw AI into something is like the quality, how much compute results in the value of the output. And what's interesting about Cerebras compared to NVIDIA or even Grok, for example, is it's really the focus on deep learning and the focus on big, massive projects is just infinite. And to me, we talked about healthcare, but I also see, we talked about self-driving. There's just so many areas where applied artificial intelligence could progress humanity forward. And I believe that if you're thinking of the way Sam Altman was talking, where, hey, we're going to invest our dollars in our compute on big projects. It's not going to be, hey, helping the middle schooler write an essay. That's what Grok is for. It can do really inexpensive inference on very low complexity projects. I think OpenAI is in the middle ground, right? They can do, relatively medium to somewhat quality complex tasks for business cases, use cases, things that we all operate on. Cerebras is for the super deep learning complex projects, genome projects, DNA, healthcare, biosciences. And I think that our society, that's what we need. And that's where we're going to invest our resources. And when you look at the customer list, it makes total sense, right? Like, these are all massive organizations that have massive upside if they can break through the technology layer in their businesses and expand even further in the moats that they already have. And so Cerebras is a bet on that. It's a bet on enterprise AI and deep learning AI. And, whether you're buying it in the pre-IPO or in the IPO, if you're holding it long tail, that's the bet you're making. And I think it's a very smart bet if you believe that applied AI across enterprise is the future.
Yeah. I mean, look, I think I'm with you on that for sure, Evan. I think, Clint, what you're talking about with the trend, though, I think there's just not enough names that are public, right, in the space. Like, this thing goes public, I think people are going to buy it. Like, you'll see a pop post IPO. So even though I think we're close to like IPO date for this thing, I still think it's attractive to maybe get in. And that's probably why we're seeing a lot of people buy over the last 4 months and run up the stock. The thing that maybe causes me pause, it's like, has that run up already happened? So, the run up the pop that you would have seen in the public markets, you actually realize that in the private markets already. So when this thing comes, it's maybe not as an aggressive pop.
What do you think is good investment?
Horizon, like Evan.
Yeah. So Clint knows my time horizon is just as long as I can get it. You know, when am I going to die? Let's do the actuarial tables on this. But wouldn't it kind of be clever to, let's say, buy in a third now, tomorrow, a third kind of in and around the IPO, and a third 6 months in? You know, just
this would be our boy Evan over here always talks about the fees,
right?
The fees associated with buying in the secondary market, right? In the pre-IPO secondary market. So, I mean, if you can get in, if you're buying enough and you just have to pay a broker fee to get in, and it's a reasonable fee, then I think to everyone's point, it probably makes a lot of sense to do it right now, right? If you got to pay carry or whatever, and then 2 months from now it's going to come out an IPO and it's going to be ballpark same valuation, you might as well just wait until.
Well, then the carry didn't matter, right?
Right. Say again.
Well, then the carry didn't matter. Who cares? But at least you're in.
I guess that's true. That's fair point. Yeah. Fair point. That's fair point.
I like buying it now, right? At the end of the day. And I agree with Nick's kind of thought too. It's just saying, hey, let's split the ticket. But at the end of the day, I think ultimately the trend's up. There's a strong runway for this type of business as a core infrastructure play long term.
Yeah.
Look, as Nick pointed out, they 10x their revenue, and they're up 2x in their last round. And Evan, I think, made a very compelling case for it as a long-term play. I think this is something you get in now if you have access and you hold it for the long term as a core AI play.
Right. Well, Nick, the last on it, the carry doesn't matter if the GP distributes it, right? If they hold on to it while it's public, you can still get hit with that carry, right? If they hold on to it. So got to make sure anybody who's buying this in the pre-IPO. Yeah. Exactly. Anybody who's buying the pre-IPO, just make sure that the GP is going to distribute the thing right away, so you don't have to pay a lot of carry. Okay, so guys, last topic. I'm going to say something bold here. You ready? You ready for this? So I'm going to say Starlink will be the largest subscription business in the world.
Whoa.
Okay, in 10 years' time. Right? So
what is today? Billion, do we have any sense? Or are we going to take some guesses?
4 million. Oh, the largest subscription business. So I'm hearing that like
Netflix?
Prime or Netflix?
Yeah, it has to be. Those are in like the hundreds of millions, right? So I mean, so SpaceX, they have 4 million customers right now, okay, globally. But there's all of this data. Okay, so first of all, just for those that don't know, Starlink is SpaceX's satellite internet business, okay? And they have enough satellite internet or satellites orbiting the planet now where they got like coverage in pretty much every continent, okay, where most people are. All right, so that being said, there's all of this news coming out of Africa. Starlink is selling out fast, right? Zimbabwe, Nigeria, multiple cities in Nigeria are selling out. There's like a black market for the terminals, right? And they just started to sell it directly online now, right? Starlink, because there was this like black market, people buying and selling the terminals, right? In Africa. So like I got to tell you guys, like, what do you think about that, right? Like, Nick, maybe we'll start with you, man. Like, what do you think about that statement, Starlink's going to be the biggest subscription-based business in the world? I think in like 10 years' time, it's going to have hundreds of millions of subscribers, right?
I think they could beget each other, right? So if I'm going to buy a Starlink and I'm off the grid a little bit, why am I buying a Starlink? I'm buying a Starlink so I can get Netflix. So, right?
Yeah.
I think that might be a tough competition. I mean, what do I use on the internet? It's probably going to be other services that would be subscription based. So, I'm going to say nay within the next decade.
Gotcha.
I would say. I'm going to say that Netflix or Prime will be ahead of it, but also there are a lot of places you can't get Prime. Right.
Okay, so Starlink still grows to be really big, but there's knock-on benefits to all these other places as well. Okay, fair enough.
I couldn't. I'm looking at the neighboring building across the way, right? So let's say everyone in that building is probably not going to be on Starlink, or definitely won't be. They'll be tied into the local internet provider. The way the world is, we're becoming more cosmopolitan, not less. A lot more density in the cities. Yeah, so I'm going to say Netflix or Amazon, assuming they're the top, they will be the number ones, and then Starlink will definitely rise. But they're going to benefit each other. So
got it. So
what is the largest? Is it Microsoft Office 365? I think there's we got to figure out what's the largest by subscribers.
Yeah.
And then there's the
because
market.
Office 365 is a subscription service now, right? We want to deem it that. Yeah.
Yeah.
Well, are we also talking about like subscribers or individual? Like, I don't even know.
Yeah.
Is a corporation a subscriber with 1,000 users, or is each user a subscriber? You know, it's all
good question.
It's all a relative piece, though,
right?
It
depends on what the definition of is.
Yeah.
Okay, so I'll let me. Here's what I think, and I don't disagree with the thesis. I believe that look, I think only like 70% of the world has broadband internet. So there's like 30% of the world, which is still like cream of the crop opportunity. Let's be clear though, like high-speed internet is quasi commodity in the developed world, right? So and it's not the most efficient way to receive internet in, say, New York City or a major metropolitan area where huge population centers are. So I think it will be a massive business. I've thought for the last 7 years that I think SpaceX is $1 trillion business. I think it's very likely it's potentially likely that goes that way. Again, not investment advice. But more importantly, I think what we have all been talking about on the podcast for the last year, which I think we're totally missing, is what about subscriptions for AI tools? And I would say that like ChatGPT or a Claude or something that makes way more sense on an individual subscription level, because I believe that internet access is a commodity. It's often paid for at your office by your company or a corporation, and it serves many people for one connection versus AI, and like an AI subscription is generally individualized one-to-one. If you're going to have an AI assistant that's personalized to you, something like Gmail. I don't consider Gmail a subscription, even though there are subscriptions for it for a paid service. Like I feel like having it doesn't seem like it's the business model that yields the highest unit subscribers. It does feel like it could have the broadest impact on all of this, because as to Nick's point, if you're getting a Starlink subscription, you're probably going to have a ChatGPT subscription in the future or an Amazon Prime subscription. So it feels like it's more important.
No, this is a good point. Clint, I got to tell you, I hadn't even really thought about the knock-on effects, but this is like like Starlink going online in Africa, and because look, to your point, Evan, like my investment thesis here is that you're going to have Starlink enters these continents, right, that do not have really solid options. Like the articles that I'm reading about Africa, like Starlink's actually less expensive than the current local provider, and it's much better quality too, right? So a lot more people can participate and get access to the internet and get better internet service. But I hadn't even really thought about the knock-on effects. But I mean, Clint, like, do you think this is then this is like a bullish play? Like Starlink continues to get adopted, you're going to get like bullish for Netflix, bullish for other like this is like signs of a bull market kind of, there's going to be a lot more people.
It's bullish for IoT. Yeah, it's bullish for the Internet of Things, right? It's not really, as I think Evan pointed out, right? It's not really in the high income developed markets. It's in those, it's got to continue to spread in the low income markets. And as it does that, you're going to essentially enhance the opportunities for the Internet of Things, for everything in those markets. So that's everything from AI down to, smart appliances. I live in a rural area and I have Starlink. And the reason is because, we're still running on old fashioned cable as it relates to internet over here. So I think it's really important. I think there's a huge market still in the US, and I think there's a massive market globally. And look, even though I know Amazon is threatening to compete, I think at the end of the day, Starlink's got a massive lead. And I think it's very bullish for Starlink, very bullish for anything internet related.
Right.
Right. That lead is going to be pretty sustainable, right? So name any company, NASA included, combine them, and they can't even hold a candle to how many rockets and satellites that SpaceX can keep putting up there, right? So yeah, I don't think Blue Origin is going to be pooping out satellites every day. That's certainly not going to happen, right?
That's not happening.
So that's a pretty sustainable lead.
But does Starlink though have a degradation quality though? If you get another 100 million subscribers, because they got 4 today, so let's say you 4x it or whatever, multiply it by a lot, does that service quality go down? How many more satellites can they really put out there?
Well, they have 6,000 and they're aiming for 42,000.
Right.
So I think that to your point, Evan, I think now that Starship is
okay, so they can handle 7x more. So that means they can handle 14 million subscribers. And
no. I don't know if they're maxed out now with the 4 million with the 6,000 that they have. Right. So that was, I'm sorry, maybe I wasn't clear. I need to do some research on how many subscribers they could handle with the 6,000 that they have in space today. But I do know that they're going to go to 42,000. Right. So that's the plan. So maybe that's $1 billion. Maybe, I don't know. Maybe that's the 2.5 billion that don't have access. I don't know. Well, I don't know what that could handle.
I guess I think about like just the, Moore's law of technology though, like the bandwidth consumption is likely to drive up, right? As internet apps get more powerful, as we do more streaming, as we use more AI inference, et cetera, like the quantity of bandwidth that we're individually consuming is likely to go up. And I imagine that scale of going up will probably rise faster than Starlink can improve the technology of those satellites and can send those satellites to space. And as the number of users on Starlink goes up, again, I'm a bull of Starlink for what it's worth, but I'm just giving the bear case is that, I mean,
sure.
To Clint's point, like even there are many historical examples of technology infrastructure at its time that felt like it was the best. Like cable in 2004 was like amazing, but now it looks crappy. And so it's not that easy to go improve the technology of the satellites that are the 6,000 satellites that are in space. So there is an element here where it doesn't make as much sense for everyday usage as much as it makes sense for people that are in far areas that do not have access to it, where the infrastructure is not that great. You're in a remote area, and so I just believe that there's the saying in finance that like if the opportunity the opportunity is so large and the margin is so high, someone else will take that opportunity and compete
for sure.
So it's likely going to happen
for sure.
So
the margin mean reversion is one of the margin mean reversion is one of the truisms in finance. That's for sure.
Correct.
Yeah.
Well,
so fellas, I look
from margin to Mars, right? Remember, Musk has his fingers on the price lever as well, right? So let's say that we can't meet the bandwidth demand, we can drive up the price, and Clint will still subscribe, but then the net new African subscribers will not, and they could pick up that what you and I used to be familiar with, the 28.8 connection. And in all honesty, you don't need much more than 28.8 to do a few simple things that we were all familiar with way back in the past. But if Clint wants 4K for the new Marvel movie, he'll get it. But he's now paying 2x the price of what he did last month, and the net new Africa subscribers is staying on the exact same rate. So when you're able to control all aspects of how many satellites go up, how much bandwidth we can push through, and what the pricing is, and you control the pricing power, you have it cornered. So
I think it's all right. So fellas, I looked it up. Amazon Prime, 200 million subscribers. Netflix has 247 million. Apple iCloud has 1 billion across multiple services.
But that's free-ish.
I'll give it to them.
Right.
Yeah,
345 million paid commercial and consumer subscribers for Microsoft Office 365.
There you go. Nice.
Right. So that was, I think Clint said, so he's the big winner today with Microsoft Office. But guys, I'm fascinated. I'm like totally fascinated with this concept of providing. Let me say it differently. I fell in love with this Starlink business because of the fact that Africa and South America, and Africa have so many people without access to the internet, right? Any internet exposure. So that to me, I mean, I can't even imagine going about my day and business without access to the internet. I can't even imagine what that's like. So if you're a person, if you're in a town in Africa and all of a sudden, like the guy down the street, your competitor down the street has Starlink and has like the internet, you know what I mean? And he's like building better stuff because he's going to YouTube and figuring out whatever business you're in, like better ways of doing things. I mean, like it's like the potential's endless. mean, like, you're like, I got to get this. I got to get this to remain competitive. It's just, I have to have access to the internet. It's just going to take over like a firestorm. So it's really, really intriguing. I'm really intrigued by this. So, but it's a good point, Nick. Knock-on effects of once
media.
you get the internet, you just subscribe to other stuff. Yeah,
Evan will raise his hand there. Like the reach of media is going to be profoundly different as well as soon as you get more eyeballs.
Right. So. Right. Fair point. All right, fellas, let's end it there. This was a good pod. I appreciate it. It's good to see you guys.
Good to see you too. Thank you.